expand again. It was like, hallelujah. And that was my target. I'm going to kick myself if I don't buy at least one Bitcoin now. The market structure of Bitcoin changes very regularly, almost every year. Like we had a major change in like the third and fourth quarter of last year in the structure. Huge futures dominant. And yeah, so I've done a lot more work on predictive models using futures meshed with on-chain. It's really interesting now. It's like one of the best model I have now, which is, man, it takes a lot of number crunching to get this stuff out. It basically looks at a lot of the on-chain data, many inputs, many signals, and also many signals from futures data, and it kind of self-optimizes and finds out over any time period what is important and what price is responding to, and it gives it weight. And it's 55% on-chain, which is really interesting because a lot of people, you're used to people saying it's hocus pocus and it's astrology, but the quantitative model I'm working with, the best that I've come up with so far, yeah, it's 55% predictive using on-chain and 45% futures currently. Yeah, that's really interesting. Yeah, like the last, you kind of come into this thinking, I'll write this letter and I should be able to call the top, and I didn't. I was not able to call the top. Why? Because the market changed, and this last bear market going from 70,000 October, November down to our lows of the early part of this year, that was not at all on chain. Like nothing on there said bearish. What that was futures selling, which really makes sense if you're an institution. Hell, why would I sell my Bitcoin to cash? I'd only sell it to cash if I can get move that cash into, say, a high gainer, or like maybe equities or something, redeploy it. But if I just want to move cash because I'm uncertain of everything, well, I'll just hold my Bitcoins and I'll sell the futures and get, they netted 15 to 17% top of the market, annualized yield. So that's what institutions will do at the top market if they want to go to cash. They'll sell the futures and move effectively, hedge to cash, and get the carry trade of what was over 15% annualized, which is crazy kind of yields being in cash. And so what we saw was this immense sell down on futures, calendar futures, and when that bottomed, that called the bottom of that bearish run, and we've been sideways up and downish in a kind of a sideways accumulation upward channel since. So yeah, it's really interesting. The futures data is real interesting in terms of there was a lot of bearishness. Maybe we got a little bit of a pump in the last 24 hours, but it's been super bearish and people going, oh, it's going 20 or whatnot, capitulation, it's going to mount. But if you were to look at our valuation models like MBT signal, MBTS, every capitulation, like from the 2018 capitulation from 6,000, 3,000, or the COVID capitulation, they really started from medium to high levels of valuation of Bitcoin according to that metric, and we're actually really undervalued right now. It's near extremes of undervaluation. So I think it's really hard to mount a capitulation because it's oversold to such a degree. So on-chain is at that stage of what we call mean reversion. It's so far out from its mean that the gravitational force is towards where it wants to be. And so anyone shorting this in correlation to any crash might have some success, but I think it's limited. I think we're undervalued right now, and it's hard to push it down. It's easier to pull it up on bullish correlation trade, harder to pull it down on the bearish trade. It's real interesting in that, because when I look at this market, I think the market topped in sort of that May. Capitulation hadn't happened in May going into June, and then we had this relief rally, which is this weird kind of, I've never seen that before, we rallied to an all-time high, but fundamentals wise it wasn't reflective. It was almost overbought, and there was no substance behind it, not in the metrics I track. And so I would say we had capitulation. We're being in a bearish sort of sideways accumulation with this sort of weird ass move to 70,000. It's like an anomaly, but the fundamentals didn't support it. It came back down, and we're still in this accumulation phase similar to that bottom 3,000 in 2019 and the 150 to 250 250 in 20 15, we're waiting to come out of this accumulation phase. And so you can see where the demand's coming from is like people not buying the underlying, they're buying, futures instrument. And then like if you're buying the futures instrument, maybe that's coming off the ETF, but that ETF is so expensive to hold that those guys are traders. So it got traded up to the 70,000 in an anomaly of a trade before it. Maybe it was correlated to like the NASDAQ and the S&P, but like, it was, I think it's anomalous, but like the data, the fundamental data looks different. And I'd say things are responding very, very quickly and differently. So like we had this very strong buying in alignment with Do Kwon's, like, what is it, like almost 2 billion he's bought now over a number of weeks. So you saw this spot demand come back in from not only spot markets and on-chain, which monitors that effectively, and you saw it come in on the futures, and you see the spreads expand again, and it was like, hallelujah, the bull market's back in, it's expanding. That whole thing reversed very quickly in 1 week, this last week, and it just went from like big bullish bubbles on my model to one day of neutral and then red, flipped on a dime. And I think we'll see more of that as well. This thing's becoming very responsive and less long-term sort of steady predictable. Like, of course, yes, okay, things move in stages. Like we had the corporate treasury push that Michael Saylor, was the pioneer of. And there's, like later on that led to the hedge fund push. And now these sort of institutional traders, sophisticated quant traders coming in to extracting yield. So these are set phases of it. Right, that's great. This is always going to happen as it gets bigger, it's mature enough, next thing comes on. But I'm really just looking at the adoption of a new technology. It's like Plan B says, it's like everybody, our neighbors, our friends, they're interested in investing in this as an asset class. And that goes through a very well understood S-curve. I invested in Bitcoin within the week that I heard of it, because it was told to me like, oh, okay, this is like a digital version of gold. You could store a scarcity and it'd be like a gold. And I was like, it was around a very simple idea through my mind going, okay, like any technology, it's going to adopt. And my analogy was, well, this is MP3s to the iPod. It's going to be from one emerging, leading edge, unuser friendly, you remember encoding like before your time, well, I think, then we used to encode MP3s off our CDs and it would run like 60 minutes to encode this thing. So it'd be a little file so we could play it on our computers in a compact way. And then it took 12 years to get to the iPod, and this was tail end of 2013. So I figured, well, tail end, we'll give it 12 years. We sort of took 12 years. That's equivalent of late 2025. This would come into like a mainstream thing. And I was like, a mainstream thing would be a mature market like gold, which at the time was $10 trillion, and it was $450,000 per coin. And that was my target. I'm going to kick myself if I don't buy at least one Bitcoin now for, I think it was $600. If this thing turns out to 450,000 by 2025 and I didn't invest, I'll regret it. So I went and bought one Bitcoin. And it's that adoption curve. It is a tech story. At the end of the game, no matter how much we talk about each step and financializing it, and I knew nothing of this, I knew nothing of, cash and carry trades and, options markets and so forth, futures markets. Look, long term, I would say, like all the noise disappears. I think Michael Saylor said that also. Just, we're all worried about the next short term move. Maybe we go to 20, well, this or that is, like this thing's been going for, how many years is it? 12, 13, 13 years. Trust it, and we're in the safer range of it, and it's asymmetrical. It's a very asymmetrical bet. If you're wrong, you lose. If you invest $1 and you're wrong, you'll lose $1. Unlikely you'll lose it all. If you're right, you'll get $10 or $20, and the probability of that you'll win is more than 50%.